Hey guys, it's Sasha. Tesla's share price as I'm recording this video is $883, which is the same as it was at the beginning of January 2021, over a year and a half ago. In that time, car production has doubled, free cash flow has tripled, 2 new factories have opened, and net income has increased by 700%. Tesla is looking to deliver 3 times as many cars this year as they did back in 2020. And here we are, 20 months down the line in August 2022, and you can still buy those same Tesla shares for the same $880, at least until the stock splits in a couple of weeks. And there are 3 major reasons why I think the Tesla stock may be about to go on a massive run to displace Apple as the world's most valuable company. And in this video, I will explain these 3 reasons why I think the Tesla stock is going to explode in some detail. I recently sold out of my Palantir position and have chosen to redistribute a chunk of that money into Tesla. And Tesla is the largest holding in my portfolio, so remember that my views may well be biased. And also remember that I am not your financial advisor. I am a random guy on YouTube sharing his opinion. My objective as an active investor is to identify opportunities where I feel I have the best chance of beating the market. Because if I wasn't trying to beat the market, I could just go and plunk all of my money into the S&P 500 and forgot about it. But stocks aren't the only way that you can try and beat the market. You can also invest into other asset classes. For example, I also invest into my business. But if you don't want to start up your own business or buy physical gold bars, you could instead invest in fine and modern art with Masterworks, who are the sponsors of today's video. Given the turmoil in the stock market that seems to be going up and down whenever it feels like, and the uncertainty around financial markets, Masterworks lets you park your money in a painting by Pablo Picasso, or a Banksy, or a Rothko. Masterworks buys these famous pieces of art and securitizes each one so that you can buy shares in it. Masterworks will then store the painting, and at some point in the future they will sell it. Investing in art, of course, has its own risks, and you may have to wait years to see your returns. But the very first painting that Masterworks sold was Banksy's Mona Lisa, which netted an annualized net 32% return after fees. And Masterworks sold 4 more paintings after that, which yielded a net annualized return of 27%. According to the Art Price 100 index, the price of leading art has massively outpaced the S&P 500, getting a 589% return since 2000 compared to just a 226% return for the S&P 500. That's more than double! Now, past performance is of course not a guarantee of what will happen in the future, but if you are curious and you want to check the Masterworks platform out, use my link in the description to get priority access to the platform. So there are 3 huge reasons why I am particularly excited about Tesla stock. I also hold positions in other companies, but I don't have the same level of excitement in the short to medium term about those. The first reason is the pull reason. Tesla has been setting up like a coiled spring over the past 2 years, and that coiled spring is about to be let go. And the results of all of that work over that long period of time is only going to start being visible later on this year. And when those results are visible, they will be very visible, and I think they will be particularly visible in the quarterly results. First, Tesla opened their 2 new gigafactories in Berlin and Austin at the beginning of Q2 just about 3 months ago. They had to reconfigure Austin to manufacture cars with 2170 cells, and both factories are going through the early stage of ramping. Giga Shanghai took 2 years to get to serious speed, but I am guessing that with a whole load of lessons learned, these new next generation factories with simpler processes, less parts, will grow more quickly, reaching serious production volume towards the end of Q4 this year, and then grow from there through the first half of next year. The Model Y is fast becoming the most popular car in the world and will probably be the highest selling car, not EV, car in the world next year. And the Berlin and Shanghai factories were closed for 2.5 weeks in July this year. This is after the whole COVID shutdown thing, to restructure their production lines. The new restructured production lines are apparently capable of delivering somewhere like 22 to 23,000 cars per week in China. Now, it's going to take a little bit longer for Berlin to get there, but the same kind of improvements have been installed there as well. Next, we've got Elon Musk announcing that the Tesla Semi will start shipping this year. This is way ahead of the schedule that I expected. I'm guessing most other people expected, although I am also guessing that the initial volumes are going to be very low. There just isn't a big enough dedicated facility for producing these semis in Nevada or in Texas. And underpinning the Semi and the Model Y and the Cybertruck that is coming next year are 4680 cells. And Tesla has had major issues with ramping production of these cells because they are a brand new form factor. They didn't exist until Tesla invented them, but they are now scaling production in Cato Road, which is a Tesla facility in California not too far from Fremont, and they are building a dedicated production line for 4680 cells in Austin. I am guessing one will happen in China at some point as well. And they've just done deals with Panasonic, LG, and Samsung to produce their versions of the 4680 cells too. Each of those companies is throwing hundreds of millions of dollars at building new factories. And I don't know how long it's going to take between them. Some of them are building brand new facilities, some of them are repurposing existing ones, some of them might be quicker than others, but I do know that the volume is coming. And together with the newly redesigned production lines and the structural packs in the cars, this is going to be a massive catalyst for ramping Tesla production in 2023. Fremont is reportedly now pushing towards making a run rate of 700,000 cars per year, despite the awkward layout and the relatively small factory size. Shanghai's new upgrades and the incoming extension should apparently be good for 1.2 million cars per year, making it one of the biggest car factories in the world. Berlin and Austin each apparently now have capacity to run at about 500,000 cars per year once they've established, hired all the people, all of that, before building any of the additional phases that are planned. And these numbers alone, before any other buildings are constructed, add up to a production level of 2.9 million cars per year. Tesla has spent the last 2 years coiling that spring, building the factories, hiring all the people, working in the 4680 cell design, developing the new car designs, the Semi, the Cybertruck, blah, blah, blah. And now all of these are arriving publicly at the same time. On top of that, whenever the 4680 cells do allow, the Tesla energy storage business should actually start growing. Finally! As it stands, the energy business has seen no growth at all for several years now and makes no profit while it's at it. Because Elon Musk very publicly said that while the cell production is limited, while there aren't enough to produce their cars, all the cells that they can make are going into cars to ramp that business. But now the battery production is not going to be the limiting factor. Energy should finally start its growth curve, and that is mighty exciting. But even without accounting for energy, the likelihood is that Tesla's car production is going to double in the coming months. Just the new factories and the scaling of the existing ones. Economies of scale, fixed costs, and lower transportation costs also mean that profits should increase at a faster pace than production. And if Tesla's share price was to stay flat from here, for example, that would potentially make for a PE ratio of somewhere in the 20 to 30 region next year. And do I think it is likely that the market will be pricing Tesla at 20-something PE ratio next year if the growth is exploding and the margins are absolutely killing it? I would say it's unlikely. The second big reason why I'm massively excited by Tesla in the coming few months is the fact that Tesla has just passed through a giant load of dirt and left it behind them. We've had the whole Elon Musk buying Twitter saga, where Elon sold a whole load of Tesla shares and got a load of negative publicity. Elon sold another $7 billion worth of Tesla stock a few days ago because the court case is pending in October that may force him to buy Twitter. And the fact is, it doesn't matter which way that court case goes. If Elon wins, he doesn't buy Twitter and his focus goes back squarely onto Tesla. If Twitter wins, then Elon will be forced to buy and that whole saga will be completed. He may need to sell a bit more stock to do it, but the whole thing will be over. They might renegotiate and settle out of court. I actually think that's probably the most likely, and I think it might happen sooner rather than later. But by the time it's 2023, that whole chapter should be closed. Tesla was also having issues with regulators, protests, approvals for their Berlin factory. We kind of forgot all about that now. There was a massive wave of attention from NHTSA and other regulatory bodies, which seem to still be ongoing because they have just opened yet another investigation into FSD. There was a whole Bitcoin saga where Tesla were first buying a load of Bitcoin for no apparent reason, then selling most of it, and the overall market sold off massively in the first half of 2021, with stocks like Tesla losing more than average. Now, don't get me wrong. Tesla will continue being targeted. Tesla is a kind of company that many people love to hate, and Tesla is destroying the legacy automakers. And the stock market could crash even lower than it has done. It is quite likely. I don't know if it will, but it may well happen. But we have had an abnormally big load of rubbish hitting Tesla stock in the last 12 months, And we've now gone through it. And I think that we are already seeing some of the benefits of having moved through it as the stock has rallied in recent weeks. And the third reason why I'm especially excited about Tesla at the moment is the complete self-destruction of the competition. Now, we've all heard that the competition is coming for some time now. But if you actually look at what that competition is doing, the gap between Tesla and the rest has not been this big, maybe ever, and that gap is widening. Volkswagen seemed to be the only car company that actually was trying to build EVs at scale, actually making some decent inroads on Tesla, but they decided that making a quick buck of spinning off their Porsche brand in an IPO is more important. So they went and fired the only legacy CEO who seemed to know what he was doing. The outgoing CEO, Herbert Diess, wanted to build a central operating system for all Volkswagen Group cars and simplify production by moving away from making ICE vehicles, removing parts, making the process simpler. Absolutely the right move, by the way, but the Porsche and Piëch family and the worker union said nine and just got rid of the guy. BMW has just recently signed its own death warrant by pretty much sacking its electric car programs that were one of the very early ones that were having any kind of success, and announcing a new dedicated electric-only platform that they expect to maybe launch in 2025. GM is busy leading the world in electrification by announcing a whole load of vehicles that they absolutely will not be able to make in any kind of reasonable timescales or volumes. Ford's latest target is to make 2 million electric cars in 2026, and that is an ambitious target that they are probably not even going to be likely to hit. Tesla will be at that run rate by Christmas this year. Toyota has offered to buy back the BZ4X EVs from their customers because the wheels seem to be falling off. And bizarrely, the world's biggest car producer can't figure out how to stop the wheels from falling off. Now, I wish I was making that bit up, but I'm actually not. Lucid and Rivian are struggling to get to any kind of volume and scale needed to make profits, and are many, many years away from getting there if they actually get there. Hyundai, Kia, and Polestar seem to be the only car companies in the world who are actually serious about making actually good EVs. And this leaves the door wide open for Tesla to take a ridiculous step forward and a giant leap in growth in the next 12 to 18 months. We're also waiting for the new factory announcements. Elon Musk said that they're expecting to announce at least one by the end of the year, and this is probably a longer-term catalyst that maybe won't have any big short-term implications. The previous factory announcements did not make any kind of movements, but I am massively excited for what we're seeing and where this might bring Tesla in the next year or two. If you found this video useful, please don't forget to smash the like button for the YouTube algorithm. Thank you so much for watching, I really appreciate it, and as always, I'll see you guys later.